Okay, so it's been a couple of days since I've actually streamed because it's been a few days since I've actually traded. We had a crazy week last week with work events and stuff like that, so I didn't really look at any charts or anything. Although I started looking yesterday, and it looks like I missed out on some really basic textbook quarter moves. It was stuck in a 250 point range between the 750 here and the 500, and just up and down. There was room for many wins here, starting from. Let's see, when was my event? My event was on the 4th, so I stopped looking all the way back when the Dow was all the way down here ish. No, maybe yeah, around here. I do remember seeing this new low because that stopped me out because I had a long at the 500. That didn't work out. It made a new low after that, but it did it with a little bit of divergence. And from that point on, the if I was looking, this would have been my trigger candle, my entry candle, the bullish engulfing right here. Divergence plus bullish engulfing near a quarter, near a major level. It's like it doesn't get any better than that, honestly. But of course, it happens right when I was at a work event and I couldn't look at the charts. That's of course how that goes. And then it went from the even 33,000, cleared 500 points easy. That's I probably would have been aggressive enough to say 500, maybe even 1,000. Um, but 1,000 is up here with a lot of traffic, so 500 might have been the safe bet. But definitely there's so much room here, more than the 250. There's so much room to be more aggressive than that because there's no traffic beyond the 250. So a lot of coulda, woulda, shoulda talk going on right now. Just to recap, the 4 days of trading that I missed, Thursday, Friday, and Monday, and I guess today is Tuesday. So more like 3 days of trading that I missed, and a lot of movement. It went all the way up to the 750, which is this area that I would have wanted to take. I think I had an alert. No, I think my alert was set up here. Um, oh no, no. Okay, so this is the area that I wanted, the 4,000. Okay, I just need to get my bearings and remember where I was at. But it really, in hindsight, I stopped looking after this, but I really should have at least had something going here, maybe at the 750 or 825, because this new low is kind of the same strength and magnitude, and it's kind of the same signal as this low. It's just in a better location now. It's just in a closer location. So the for every single reason that I wanted this area, I should have also taken this area. It's a 750. It's a major quarter. It's a strong move with big red candles creating new lows. But I think at the time, if I recall, that I was looking at this area to play it as support because of the divergence, and that's why I didn't. I was probably distracted by the fact that I took a loss, that I didn't place another limit, right? So that's one thing I need to work on, to just uh, if the variables line up, if the confluence is there, then just set it at the major level, because this would have worked. Look how beautifully that would have worked right there, right to the T, the 750, and of course it would have hit profit very quickly, and then from here. So this is the point when I looked at the market, it would look something like this, and I was like, I kind of want to take the 500 back up, but I'm not. It's right now I can't call that a legitimate bias. The RSI is below 40. Um, it technically broke this low. I'm not really convinced of it being a bear market until it really break like a downtrend, I should say, until it breaks this low right here. but it also didn't make a new high above here, so it's kind of in the range. So I can't really say like you know it's kind of not that strong of a bias to say to take the 500, which is a weaker number anyway. It's the weakest of the four quarters. So for those reasons, even though it did end up working pretty nicely, like here, like this morning it worked, and I was like, damn it, I should have taken it. Um, but the but for all those reasons, I don't. I mean, obviously, with this having worked out, hindsight being 2020, there is some regret in saying like, man, I should have just taken the shot. But the safer shot was to take the 750 back down, which is the one I did take. So there was a lot of room here for big wins. There's the 500. There's from 30,000, 33,000 to 33.5, and then from the 750 down to the 500, from the 500 back up to the 750, which hit this morning. And since then, I don't know what's going on today. It's just a lot of movement. Actually, I do know what's going on today. CPI numbers came out today, and they were slightly bad. So that can explain these red candles here. I don't have an explanation for this giant bullish blue candle. It was probably just a fake setup all the way back up to this area. This is such a beautiful area. This doji candle, bearish engulfing candle is at a quarter, at a major quarter. That's the trifecta right there. So when I saw that, I took it. I placed an order there, and it got hit this morning. And I was like, oh, okay, let me let it play out. And then literally like an hour later, it hit profit, and I was like, what's going on? I almost didn't believe the notification because this app has been so buggy. I almost didn't believe the notification, but I checked, and of course, wouldn't you know it, lucky day, I had profit. So made up for some of the losses that I took because I got sliced up like crazy on this downturn. I remember last week. I think I lost like 3 or 4 in a row. It was like at this quarter right here, I think, or maybe it was at the 500. I had 3 traps set. They all got destroyed. And then I think maybe I think that was it. And then I stopped trading Thursday, Friday. I didn't trade at all Thursday, Friday, or on Monday. So today's Tuesday, back in the game, just kind of get caught up. It's still kind of stuck in the range, probably in anticipation for the CPI numbers and the Fed announcement, if I'm not mistaken. There is a budget balance thing. I think Jerome Powell speaking later at 2 p.m. today. Either way, I'm pretty much gonna say I'm done for the day here, because I don't want to trade into an announcement when I've technically already benefited from the previous announcement, right? This rapid downturn move that for an area that would have probably otherwise worked anyway, just a little bit slower. The announcement this morning accelerated my profits, or accelerated my position into profit, sooner than expected. Doing so actually caused a little bit of divergence here. It made a new low, but the RSI actually made a higher low. So usually in this type of situation, I want a piece of the action, and I would probably the aggressive move would be to front load the. I'm just gonna put an alert there because I don't know. I'm not convinced that I actually want it. The aggressive move would be to take the 325. The standard move would be to take the 250. So I will just put a 250 there. Take a buy at the 250. That means my stop loss will be 175, and then the profit is 33.50. So I will place this, right? Because I do want a piece of that, and maybe a 175 as well, right? That's standard procedure. And if I see evidence of it dancing around at the 320 and it's bullish, or if the announcement comes out pretty strong or something as a green number, then I might take it from here as well. So I will be paying attention because I have a light day for the day for like the first time in a long time. Um, so let's see, 175 to 425, 250. So I will place that backup order in as well. So I'm aiming for, because of the divergence, regardless of the fact that we have a CPI news coming out. I don't want anything right now because I'll be subject to volatility. But if the CPI numbers are bad, um, well, I mean, regardless of whether they're good or bad, I think if it hits this area, the next quarter, after already establishing somewhat of a bullish divergence of an upward momentum, I think there's enough room for me to scrape 250 points out of this. So that's the chance that I'm taking. It's a little bit more aggressive and risky because the safer move would be to wait until after the Fed announcement comes out later at 2 p.m. But I have the alert here, so like I'll be, unless it happens within a matter of seconds, and a huge candle just prints like 500 points in like 5 seconds, um, which is unlikely. I mean, it has happened before, but it's unlikely to happen on a day like today. Unless that happens, I think I'll be okay. So I'll be notified by the alert first. When the alert goes off, I'll look, see what's happening, and either leave this on or take it off.